All right, good morning, everybody. Rogue Macro back with another one. CPI live reaction going out on Telegram and Twitter on Rogue Macro. If you're watching on Twitter, check out the community. Okay, so CPI came out. If you guys are not aware, I have been on the deflation side of things for a long time, which has put me on the outs. I tell people things that they don't necessarily want to hear about inflation. I don't confirm people's biases. A lot of people just think, hey, we're quote unquote printing money. Inflation is going to go high. Look at M2, look at M2, look at M2. Of course, we know here that stuff is not inflation. And so we expect a credit-based model, which is what we have. When you start having problems with credit, recession, depression, popping of the bubble, what happens to the amount of credit? It shrinks. That is the money supply shrinking. That's a hyper-deflationary event. Okay, so overall, over the last several years, 5 to 10 years, I've been watching for CPI to remain low. All right, and for things to be transitory. And I called it transitory at the time, going back to 2021 and 2022, the whole time saying it was going to be transitory. And that's exactly what has happened. It has turned out to be transitory. But here we go. This is bls.gov/CPI. You can see CPI for all items rises 0.3% in December, shelter and food up. Another caveat here for CPI is that there was a break in the data due to the government shutdown. And so some of these numbers might be trying to get back on track. But that's what we're looking at. What else does it say? In December, the consumer price index for all urban consumers rose 0.3%, seasonally adjusted, and rose 2.7% over the last 12 months, not seasonally adjusted. The index for all items less food and energy, that's core, increased 0.2% in December, up 2.6% over the year. All right, let's dive into here and see. They say shelter is up. So we're going to take a look at this verbiage here. All right. Increase 0.3%. Another thing, guys, you want to look at the month over month, which is what this is, 0.3%. That's the best way to look at CPI. Year over year, a lot of nuance is lost because you could have very high inflation 11 months ago and it would show up in the year over year. But right now, let's say have 0% inflation. You wouldn't be able to tell that we have 0% inflation. Whatever your policy recommendations would be based on something 11 months ago that has already ceased. So it's best to look month over month. You can also look quarter over quarter is, 3-month moving average there for 3 months of inflation. That's a interesting one to look at. Year over year is it's really hard to see any sort of pivot point in inflation when you look at year over year. So we try to concentrate on the month over month. All right, I'm yapping. Percent of a seasonally adjusted basis, blah, blah, blah. 12 months. The index for shelter rose 0.4%. Okay. Now the way people that are listening on Telegram, I'm sure you know because you're listeners of the show, but if you're catching this later on Twitter, shelter is collected a different way. Even within the one government of the United States government, they have different methodologies depending on what number they're looking at. So CPI will have one methodology, PCE will have another methodology. And then when you go to other countries, they are going to have other methodologies of how they do shelter. So it's not quite apples and oranges when you look from, say, Germany's CPI to the US CPI and you compare it, because shelter is a huge component and it has different methodologies of how they count it. In the United States, they have rent and owner equivalent rent. Owner equivalent rent is the thing that people don't like the way that it's done. Okay. And that means what they do is they ask owners and they say, if you were to rent out your house, what would you rent it for? So most homeowners don't even think about that on a day-to-day basis. The way that they would get that information is they probably go around and look at rental rates, see what other people are renting their stuff for. They're not going to say, oh man, I need this amount. That's what I think it's worth. I'm going to rent for that. No, they go out and they see the comps, the comparables on the market, and that's how they make their decision. So it's kind of a weird methodology to do for shelter. And it also has a very big built-in lag. So rents have a lag all their own, right? If I sign a lease for 12 months, I'm not going to experience an increase in shelter costs for 12 months. Maybe it happens 6 months through my lease. New leases are going up in price, but mine isn't until 6 months goes by, and then it goes up. And it might not go up by the same amount. If I have a lease in an apartment complex and rent for new people goes up by, say, 10%, when I sign my new lease, it might not go up by 10%. It might go up by only 5%, depending on how they treat new renters versus existing renters. But anyway, so there's a lag. There's a big time lag built into rent. And now if owner equivalent rent is based off market rent, that's going to have another lag on top of that. So there's different lags that are built into shelter. And it's 1/3 of the number here. It's 1/3 of the CPI is shelter. Okay, let's continue in. The food index increased 0.7% over the month. This surprises me. I've been noticing lower prices on food, actually. Energy rose 0.3% in December. That also surprises me because I just saw gas near me at $2.50 a gallon. That is very low. Index for all items less food and energy rose 0.2% in December. Now, the reason why they do less food and energy, because food and energy are pretty volatile. There could be some situation, geopolitical situation, and the price of oil spikes, and that has a trickle down with gasoline and other things, heating oil and all sorts of things. So energy can be very volatile, and it wouldn't necessarily be good to base policy responses on something so volatile like that. Food is another thing that's volatile. Think of oranges. You could have a bad harvest of orange, or maybe you have a freeze that goes through and damages all the trees and all the fruits. So food, that's going to cause prices to go up. So food is very volatile as well. So let's take these volatile things out and see what everything else says. And that says 0.2% in December. Now, this is right at that mark. So 0.2% annualized is 2.4% inflation. If you, what do you have to get to the magic number of 2%? It's 0.1666666. That's what you need to be at 2%. That rounds up to 0.2, by the way. So if you're at 2% month over month, annualized, it'll look at like 0.2%. So we're right there. We're right there for core, at least. Indexes that increased over the month include recreation, airline fares, medical care, apparel, personal care, and education. Indexes for communication, used cars and trucks, household furnishings, and operations were among the major indices that decreased in December. For all items, used cars and trucks declining, that is a sign. That's one of those things that you look at when that changes direction. If it's increasing, changing to decreasing, that's one of those kind of telltale signs of what's coming in the near term future. All items index rose 2.7%, the same ending November. All items less food and energy rose 2.6%. All right, let's take a look. So here is shelter. And we can look over here. We can see these couple months of very little data due to the government shutdown, which is disappointing. And when they actually said, this could have lasting damage, you could do lasting damage by this government shutdown. And this is what they're talking about. So there's a lot of data like this in government numbers now that are going to be missing and not be continuous, right? We want to have these continuous numbers so we look at trends and that. But now when we have these big gaps, that's going to do permanent damage to a lot of these series. Shelter, you can see we're at 0.2, 0.2, 0.4, 0.2, 0.4. So nothing crazy. I mean, it's right guys, we're getting really close to somehow the economy is really close to landing this thing at 2%. Will it stay there? Probably not, obviously, but that's where we're at. Okay, energy. We have gasoline, and you can see more volatile. Here's 1, and then it goes to negative 2%, then positive 2%, then positive 4%, then negative 2%, 3%, negative 0.5%. So that's, you can tell just how volatile that is, right? Fuel oil, same sort of thing. So this is interesting. Energy commodities as a whole was down 0.4%, but energy as a category was positive 0.3%. Energy services, positive 1%. Okay, that's where it came from. There we go. Commodities, less food and energy, 0%. So all in all, guys, that is what we got this month for CPI. I expect it to continue to be weak to the downside. Here is Trueflation. Let me share this one instead. Yeah, okay, Telegram's got it too. So Trueflation this morning, they have a different methodology altogether than CPI. Is basically real time. I think it's daily that they go through and actually pull real prices, and they give you this inflation rate. And you can see back in December they had it. Let's see. So starting about here, 2.4. By mid-month, it was 2.7. Then it started coming down. So I would say if you averaged out all of December on Trueflation, you'd be about 2.3, 2.4. 2.3 to 2.4. So that's what Trueflation would be saying. And right now they're currently saying 1.7 and on the downward trend here. So we will see. We will watch that. I like watching this as well as CPI. All right. Well, that's going to do it, guys. Thanks for hanging out. And I'll see you guys on the next one. Bye.